Hi everyone, I hope this finds you well. Today is Monday, September 19th, 2016, and in about 4 minutes I will share with you a brief overview of the markets last month, and I'm going to provide some insights as to what the upcoming presidential election in November could mean for the markets. I know you're probably anxious for me to get right to the election topic, but first let me tell you what happened in August. The S&P 500 index finished down 0.1% for the month, which ended the 5-month winning streak. August was unique in that volatility in the S&P 500 was exceptionally low. In fact, there was not one trading day the entire month that the index moved up or down more than 1%. Despite the slightly negative performance in August, the S&P 500 was up 7.8% year-to-date as of the end of August. August was a good month for international investing for both foreign developed and emerging market stocks, as they both outperformed the US based on MSCI EAFE and MSCI emerging market indices. Not only were European markets only minimally disrupted by Brexit, but in dollar terms they have actually outperformed the US stock market. Let me repeat that. Post-Brexit, European markets have outperformed the S&P 500, which is pretty incredible considering the volatility we saw right after that vote. So for the remaining few minutes we have, I want to talk about the election. Now, without having to go down a political rabbit hole, what I will say is that experience has taught us that it's probably best to keep our voting and our investment decisions separate. Because at the end of the day, the stock market can perform well, regardless of who sits in the White House. So which party is better for market returns? A common belief is that the Republican Party tends to be more pro-business and therefore they produce better returns for investors. But as you can see in this chart that Oppenheimer funds recently put out, the markets have done well and have had bouts of difficulty during presidential terms of both parties. If you look at the Dow Jones Industrial Average since its invention in 1897, it's clear the stock market does not favor either party. A couple additional points the Oppenheimer piece mentions are, one, the campaign rhetoric doesn't always influence what happens during a president's tenure. In other words, what presidential candidates promise to implement as part of their platform and what they actually implement may be different. Secondly, consumers and businesses have a far greater impact on the economy than government. So in conclusion, despite the fact that we have two of the least popular candidates in the history of our country, or at least since we started tracking that metric, that doesn't mean we should abandon our investment or our financial plans. We should instead continue to focus our attention on the market and the economic fundamentals, which still support the late cycle of an economic expansion. I know it's hard, but we have to learn how to control our emotions, both when it comes to politics and investing. Thank you for taking the time to watch this. If you have any questions, please feel free to reach out. Take care.